You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Hey, Jim. Thanks for having me.
Well, the markets keep charting new highs, but we have a feeling that those highs really aren't what they appear to be. And I said it's like the way they like to yell and sell on some of the business news channels, where they have very pretty charts. They look exciting. Look at this blue line. It's brighter and bigger than this red line, so it must be important. It must be right. Is what we're seeing important, and is it right?
Well, I reported on it, I don't know, with some details and some statistics several letters ago, but just in general terms, people don't realize, but every stock market crash has occurred with the market at new highs. And, even if you go back into the, around the early 1800s, that's the case. But in more recent times, look at 87, look at 2000, look at 2007. That's the way it happens. And also, the bullish sentiment is always the highest at those highs because people think everything's fine. And I realize that I have been saying that this rally is extended and that it's baseless and that it's a bear market rally and all those things. And I realize that it has continued to manage to push to a new high and a new high and now it's at a new high again. But it doesn't change those underlying factors. It's even more extended. If you peel back the layers and look at this thing, it's made this most recent new high with less new highs on the NYSE than was seen with the new high that was made in March. And the new high that was made in March was made with less new highs than was seen in conjunction with the high that was made back in December, and so on and so forth. So, the powers that be, and I really think that they have a hand in this, have done a absolute masterful job at keeping this thing up. But in the process, and I've been doing some research, and when I say research, just looking at the opinion from other sources, outside looking in type thing, and reading foreign financial papers, newspapers, and other such publications, what I'm seeing is that it's the American people that are the ones that's in the dark. I think that the foreign countries, obviously, I think they see it. They see what's going on here with this market. And when I say the foreign countries, I think a lot of the foreign people, but specifically the foreign governments. And I was reading some stuff about how Russia specifically has made a move to start heavily divesting out of the U.S. securities and so forth. And it's because of not sanctions and war stuff, but it's because they're seeing the economic impact and where we're at and what's going on. And that's true with some other countries as well, some things that I'm reading and seeing. And so it's like the American people are the ones that's being hoodwinked here in a big way. And, I maintain that based on these statistics, I know it's crazy to say, but it's like everybody knows but mom and pop running around trying to make, and I don't mean that in a derogatory sense. I mean, mom and pop's running around trying to make a living and deal with their kids and have a family life, and they turn on TV for their news, and the economist tells us that everything's okay, and so, they don't have time to dig into this, and so they think everything's okay. Well, everything's not. And I'm telling you, this is the biggest mirage of all time. And if you go back to the inception of the Dow Jones Industrial Average in 1896, there is a 4-year cycle ebb and flow. It's like clockwork. It's averaged 48 months since the inception of the averages from low to low. This is the longest extension ever. This is the longest extension. You combine that. It's the longest extension not only of a 4-year cycle, but it's also, like I said, has occurred in conjunction with all the signposts for a secular bear market. And then you look at, the underlying economic issues. I mean, where's the jobs? If there was a recovery in the economy, why are commodities lagging? Why didn't commodities go up with this? If there was a recovering economy, then why haven't they raised rates? If there was a recovering economy, why is the job participation rate still where it's at? If there was a recovering economy, why would they be talking this thing up every time it tries to decline? There is no recovering economy. And they know it, and they're trying to keep it together. And the issue at hand is that when it, I say all that to say this. The market, there's a couple of things to look at. Not only do you have the vital signs, if you will. And the vital signs are the underlying technicals. Other vital signs are the underlying fundamentals. But ultimately it's about structure. And right now we're looking at the structure, and the structure, if you will, is the charts, and it has a heartbeat. So it's still alive. So we have not, while the vitals are horrible, it still has a heartbeat, okay? And what we're looking for in these charts, what has to happen is this structure, until this structure turns bad, then, it's going to linger. And, does that mean that we have continue to see new highs for another month or another 6 months, or that we possibly seen the top here, yesterday? I don't know. It's about that structure. And so it's the structure that we're watching. But once that structure changes, and it goes from that normal, and I'm not a medical person, but from that normal heartbeat rhythm to the flat line, it's done. And there is absolutely nothing that I think all the King's horsemen and all the King's men can do to put this thing back together again at that point. Because that structure is what's going to cap it. And given the underlying vitals with the economy and the underlying technicals, then I think that the statistics will be fulfilled, and the statistics tell me that this is going to be one hell of a show, that it should go, statistically speaking, below the 09 low, as hard as that seems to even fathom. That's what it tells us. So I maintain that that's what's going on. I think that the powers that be know that. I think that's why they're fighting it so hard, and I think they're preparing for it in many ways. And I think that from reading many of the articles and things that I've seen, I think the foreign governments and the foreign people know what's happened here and how that this has been manufactured and pushed and extended, and the consequences of it. And I think that when it happens, and that structure does change, I think this time, I probably said this before, if not, I'll say it now, I think this time it's much worse. I think it's global in nature. I think that they, in trying to save it, they have only made matters much, 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 much worse. But it's all about structure. And, I talked about the DNA markers and said that the rally was going to continue until, we get those markers in place. Well, part of those markers, some of it has to do with, the underlying, internals or the vital signs, if you will. But the rest, ultimately it's about structure. And, right now, it is what it is. It's still beating.
Do you think it's, setting up for the traditional September/October crash? I think
that cyclically I could see something coming with a top in this summer and at least of some degree, and the decline into the fall. Obviously, that just seems to be almost like a self-fulfilling thing. But actually, and I say that not because I'm saying I can see that weakness, not because it's fall and everybody's expecting a low, but I mean that is one piece of it. But I also see the cycles kind of pointing that direction. In that there's an annual cycle in the market that is due around that time. There's some intermediate degree cycles that are due around that time. So there will be pressure on the market, as well as that little seasonality factor, if you will. And of course, then the question becomes, if and when that does start, do we see the proper structural setup that will cap it, that will checkmate it? And that's what we're looking for. And, those checkmate, DNA markers is something that was traced back all the way to 1896. So we will see it when it happens. But in the meantime, it like I said, it kind of marches on and lingers, and it is what it is.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet. for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, China over the last 3 or 4 years has literally bought every physical piece of gold they can lay their hands on. I've heard there's a good possibility in October they're going to announce that the yuan is now backed by gold. What kind of an impact will that have?
Well, Jim, I've been reading the same thing. Like I said, I've turned to some alternative sources to start doing a little digging. And I say alternative sources, foreign sources. And that's one of the things I was reading just this week. And I have heard that before. I just kind of confirmed it in some of the sources that I was looking at. And so I think that could be a real problem for the dollar. I think that part of what has happened with the foreign countries is that they are tired of playing the game with the U.S. just nilly-willy printing. And so I think there are some real legitimate undercurrents to try to for some of these countries to try to get away from the dollar. And as we all know, all oil purchases are denominated in U.S. dollars. And there's some of these countries, from what I gather, I mean, I'm no expert at this, but I have read enough to see and understand that, they're looking for alternatives. We have the formation of the BRICS agreement, whatever that's all about. I have kind of high level understanding of it. And then we also have, like you said, I've heard the same thing about China. And then, you have these countries starting to divest of some of the U.S. securities and bond holdings. And then, if you really go out there, and I believe there's probably something to it because it's lining up. It's another layer of confirmation pointing toward the fall. But, you have this, what's the guy's name is talking about the Shemitah stuff, and that's far, way outside of the rim of what I do. I mean, I look at charts that it all points to the same things. And so it kind of is confirming. I think we're setting up, or trying to set up, I should say, structurally, for some bad economic, like I said, a decline. And maybe where I'm going with that is that once this thing sets up and we see the kind of decline that I'm talking about seeing, maybe that, I don't know. I don't have the crystal ball there. Maybe that is what, maybe that is the demise of the dollar. Maybe that's when the Chinese come out and play the card, or whoever. I don't know. But can I see that possibility? Absolutely. Looking at the charts and looking at my statistics and knowing that there should be a 65% decline in this market that takes us below the 09 low, heck, I can't say that, rule out many possibilities. I think anything's possible. And then you see all this stuff happening, and so, there's a lot going on underneath the surface here. And I also kind of, something, it's almost like something's in the air, like there's a feeling that things could change.
Well, the person you were talking about with the Shemitah is Bo Polney, and I just interviewed him last week for my weekend This Week in Money show. And he just said his charts, he does a combination of both traditional Dow theory charts, and then he adds his own logarithms to it where he looks at other cycles that combine, and he was just saying this is not setting up to be a good thing.
No, it's not. And the thing is, I have talked about this. I've seen it. I've seen it from a distance. And when I say a distance, I mean, I knew. It's just basic technical analysis for someone that can stand back and look at the forest instead of the trees, that, like I've said 1,000 times, this economy and secular bull market peaked in 2000, and they have extended it. And the rally out of the 02 low was an extension of the cycle within the context of a secular bear market, and they've only made matters worse by doing that. I mean, look at a chart. You can look at a chart. You got the 98 4-year cycle low. The market, just imagine this in your mind. The market rolled over into a normal 4-year cycle low within a bull market in 1998, and then you go up into the 2000 top, and then you had that big decline into the 2002 low. All right. At that point, you had the you had the 2000 secular bull market top, but you had that big decline down that went below the 98 4-year cycle low in conjunction with the first leg down in the secular bear market. Well, then you start out of the 2002 low, you start up and the market moves above the 2000 high. Well, and in that leg, it took commodities and housing and everything with it. And that was all on the back of the liquidity infusion, the manipulation to try to ignite the economy, to try to get, ether in the carburetor, try to get it going again. Well, and I said then, you can't stretch these cycles. It's a statistical fact. The longer they stretch, the worse the revision to the mean. And I said it was going below the going below the 02 low. And we did. So we had that huge decline below the 02 low into the 09 low. All right, well now draw this into your mind. Finish the chart. So we go from 09 into this next 4-year cycle top, and they've done the same thing. They've extended and extended and extended. Well, this time it didn't take housing with it. It didn't take commodities with it. Where's the jobs? So the only bubble that really, exists this time, or I should say the bubble itself, is in stocks. And it's the most extended cycle ever. And so all those things point toward, and now we have this Dow theory, we have a serious Dow theory non-confirmation, and I suspect that may be tried to manipulate that away as well, but, right now it exists. But anyway, what I'm saying is from a pure technical perspective, looking at this thing develop over the last 15 years, I've seen this coming. I mean, it's been clear what's happening, and then you combine that with, I'd never heard of the Shemitah until last year, and then these people start talking about that, and so yes, it fits, and yes, it makes sense, and it makes sense because of what I've seen, that each one of these declines have been worse because each one of the advances have been more exaggerated and more manipulated, and therefore it took, it's kind of like Newton's law, the opposite and equal reaction. Well, you extend the stupid thing up based on nothing, then you get a vacuum under it when it falls. And so absolutely it lines up.
Tim, thanks a lot for chatting with us.
You're welcome. Thanks for having me.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.